Hello everyone. Today we will see the meaning of accounting. You can see here accounting meaning. Accounting is a process of identifying, measuring, recording, classifying, summarizing, analyzing, interpreting, and communicating the financial information to the users for taking various decisions. Accounting is a process. That means what? It has various steps in it. We have just observed, no, like identifying, measuring, and followed by recording, classifying, all this. These are the steps. Let us look into each step one by one. Identifying. Identifying means what? Here we need to identify business related transactions. That means owner's personal transactions are not recorded. Let us say you are the owner and you have the business. You're going out for attending some party or a family function. There, what is that? You spend around 10,000 rupees. That is your personal transaction. That will not be recorded in the books of accounts which is maintained in the business. Here only business related transaction will be recorded. Example, think that you're paying rent for a building where you carry the business. You're paying around 20,000 rupees. That should be recorded. Paying salary to the employees around 3 lakh rupee. That is to be recorded. And let us say you purchase raw material for rupees 50,000. That is also to be recorded. All the business transaction should be identified at first. Okay. Which is the second step, that is measuring. Measuring means what? Those transactions which can be measured in terms of money, only those transactions should be recorded. Means it should be of quantitative in nature. That means purchase of raw material for rupees 10,000. 10,000 is a quantitative factor we are talking about. And payment of wages rupees 10,000. And purchase of building rupees 20 lakhs, for example. Okay, this is like quantitative in nature. These transactions will be recorded. Here qualitative aspect is ignored. We are not going to record. That means let us say you have got a good talent. You are the owner of the business. You have got a good talent, that is not recorded anywhere. You have good skill, that is also not recorded. You are very hardworking, it is not recorded. So what is recorded in the books of account? Those transactions which can be expressed in terms of money. Money can be in Indian currency or dollar or any, depending on in which country the business is being carried on. Okay. Next, the next step, that is the third step, is recording. I have been telling from the first step, record. So where do we actually record? We record all the business transactions in the books of accounts. Which books are we talking about? One is journal, another is subsidiary books. We are going to learn in depth in coming videos. For time being, journal is just like a rough book where all the transactions will be recorded. Like for example, today you are having a bakery. Today you sell around 10 cakes. You need to record that for how much you have sold it. Let us say you have sold around 5 packets of chips and 20 pack of biscuits. And also you received, some amount from, like in the form of bank interest. All this should be recorded actually. Every day, whatever happens, day-to-day transaction, you will record in one book which is called as journal. All type of transaction, like it may be payment or receipt or it can be payment of salary, it can be payment for purchase of new machinery, it can be payment of wages to the employees, payment of interest, anything, all nature related transaction will be recorded in journal. It's just like a rough book. And another is subsidiary books. Subsidiary books, here you have purchase book, like only purchase related transaction you will record here. And purchase return book, sales book, likewise only sales related transaction you will record in sales book. Likewise you have sales return book, cash book. Cash book means if you are buying something and paying immediately the cash, or what is that, you are selling something and you are receiving cash immediately, that is nothing but cash transaction, that will be recorded in cash books. Separate set of books we are going to record. Likewise, you have a bills receivable book, bills payable book, journal proper. All this you will be learning later. For time being, I just said you'll be recording all the transaction either in journal or subsidiary books. Going further, that is about classifying. We classify in the form of ledger. We prepare ledger accounts. Like we have separate accounts like machinery account. All those transactions related to machinery will be recorded under account called machinery account. Rent account, payment of rent, all that will be recorded in rent account. And salary account, whenever you pay the salary, all the transaction related to salary will be under that account. Separate set of accounts we prepare, that is nothing but classifying. It is called the ledger accounts. And summarizing. Summarizing means what? Let us say you're at the end of the year. You cannot look into each and every transaction that happened in the whole year. You need to have the summary of that. Like how you have summary of the poem, summary of the big stories in English, Kannada, like that. We are also going to summarize the transaction that happened in the business. How we are going to actually summarize? In the form of trial balance, in the form of financial statement. Under financial statement, you prepare trading account, profit and loss account, balance sheet, all this. Okay. Going to the next, analyzing. Yes, after summarizing, after having all the transactions of the business, you need to analyze it, evaluate it, right? So for evaluating the business transactions, what we do is we prepare trend analysis, comparative analysis. All this we prepare in order to evaluate the business. After analysis, we have interpreting. Interpreting means what? What we actually do? We draw the conclusion. We draw a conclusion related to the performance of the business, how well the business is performing, and about the financial health of the business. You say no, financial position, like what is the value of assets of the business, how much liability it has. All this we get to know. We come to a conclusion, and based on that conclusion, we take certain decisions. That is interpreting. After all that, what we do is we communicate. We means the organization point of view we need to always think, or the business point of view we need to think. Communicating means whatever the financial information is ready now, that is to be communicated to certain people. Who are the people? Like shareholders, it can be managers, it can be employees, okay, because they need to take certain decisions based on that. So we communicate all the financial information to the stakeholders or users who want to take various decisions. For example, let us say there are certain investors, potential investors who have money. They need to invest on your company. Simply do they invest? No. After analyzing the financial information of your business, then only they think whether to invest or not. So they need financial information. That is why we need to communicate your financial information to them. It is like that. Okay. And employees also. Why they need to know? If you're running an organization, if you're having a business, why employees need to know about the performance of the business? Because they need to know about how secure they are in their job, or they should decide whether we can continue in the job in this organization or we should look into some other jobs somewhere else, right? Like that. And also customers, they are also like, they can know about this because they need to know whether they can really rely on your products. For example, let us say you're the manufacturer. You supply in bulk to the wholesalers, right? They will have their own customer. Wholesalers need to know about your financial strength because they should know whether they can always depend on your production for selling it to their customers. If the production in your organization stops, what happens? You cannot sell anything to the wholesalers. Then even that wholesalers cannot sell that to their customers. It will be very problematic then. So there are many users of accounting information to whom we need to communicate, as they take various decisions. This is about the meaning of accounting.